The result season has already started, and many of the people might want to analyze a lot of stock at a time. And I can assure you that Strike can help you to save a lot of time. The other day, someone asked me about persistent system. So, I can tell you how I go about, but obviously you can set your own processes. You can go to the global search at the top and you can type persistent system or any stock for that matter. And then what I usually start looking at is, how the company is for that, how the ROE is, how the dividend yield is, what is the price to book value and so on. At the overview page, you can also see the seasonality of the stock because, some stocks are cyclical and they might sometimes give, good results when they are in a particular month. So say for example, gold stocks, they typically tend to do well, prior to 2 to 3 months of Diwali and so on. So seasonality can help you give some insights. Then you can also see, how the promoter holding is and how the FIIs and DIIs holding, is it improving? Is it, are they trimming their position? So those are something that you can see over here. You can also see the visuals as well because, some people may like visuals. So that can be the starting point. The other point then what I look for is I go on the fundamental page. So over here you can see that you get a summary of the entire fundamentals. So on the left you see is valuation, then you see the results. So annual, quarterly, you can see the balance sheet. Typically if you see something like an expanding sort of pattern or a megaphone, you can say, then it means that the company is increasing its balance sheet and that is a good sign that the company is growing. Then you can also have a look at the cash flow, the important financial ratios, and peer comparison you can do on few of the important parameters. So this is the second thing, which I typically look for, and largely I look for the balance sheet because, this megaphone, sort of assures me that the company is growing. Now, the next is basically the valuations. The valuations, when I go to max and when I see specifically for persistent system, so this is an IT company, so typically, one may value it based on the PE, and you can see that there has been a dramatic change after 2020. Where the PE earlier used to be in the range of say around 15 to 17, but now if you see, it is sustaining higher at around 57 kind of levels. And even if you go by any historic valuations, so what we have given is a summary at the bottom as well, as you can see over here. So you can see that historically the PE, the average PE has been 43 for 3 years, 32 for 5 years, and for 10 years it is 25, and so on for the other ratios as well. So basically what I see over here is that on all the parameters, persistent system is actually trading above the 2 standard deviation mark, right? If I go by EV to EBITDA, market cap to sales, or any of the valuation matrix, if I go, or price to book, so then this makes me think that what is it that the market is knowing about this stock, where, like, why it is giving the stock a higher multiples. So then what I do is that I go to the annual P&L and I see the results and I see that it is growing very nicely. Now if I want to see the growth percentage, I simply click on the drop down and I click growth percentage, and I can see that the company is growing very well. Now if someone wants to see it visually, they can see it visually as well. So the line that you see is basically the growth percentage of revenue. Now if you want to also do additional studies, so you can put them in all the other parameters as well, like consolidated profit is the blue one which I have put in, and you can see that more or less it has been in line, but after 2020 the PAT growth has been lot more than the revenue growth, and probably that could be one of the reasons why the market has kind of re-rated. Now when I come to the quarterly chart and I see the results, So again over here, I would like to see the growth percentage of that, because the stock is trading at a very hefty premium to its historical valuations. So when I do growth percentage, you can again see a drop down whether you want to see YOY or QOQ. So in case of persistent, if I do QOQ, and I can see that earlier, every quarter it used to grow nearly at a double digit or very high single digit. But since past 3-4 quarters, the revenue growth has gone down, and it is in mid single digit or low single digit. And again, if I see the profit growth, so apart from the previous quarter, the profit growth has kind of been lackluster as well. So now this begs the question that is the higher valuation that the market is giving is justified or no? So for that, you will definitely have to do some qualitative analysis and read through the annual reports. But Strike can quickly help you to get a quick summary of what is happening in the company. And if you still don't have an account on Strike, you can have a free trial for 7 days and you can make an account. Thank you.